Good morning, guys. This is Joe Baker with Trade Pilot Pro. A lot of emails, a lot of inquiries on what we're seeing, how we're seeing it, and how we define trend in the marketplace. I'm going to do a brief webinar here on what we're one of the indicators that we use. I'm just going to go over one by one. We're limited here on YouTube, so I can only go 10 minutes per. So we'll post many on all the indicators we use. We'll just take it step by step with you guys. Right now, I'm going to go over what we use. It's called the Andrews Pitchfork. Okay, this is actually today's market on the open. What I want to show you here is how we would evaluate this trade. The pitchfork is an auto fork. Okay, so we don't draw these. These aren't hand drawn by us. Actually, it's calculated to configure the pattern. Once the pattern takes place, the actual pitchfork will fire off. Okay, so if there's not a pattern set up, the pitchfork won't fire. Okay, so the good thing is you're not going to get any false signals because it won't come on. That's the great thing about this pitchfork here. As you notice, down around about 5 o'clock in the morning, we kind of hit a low, a little below 848. In the Russell, kind of came up to about a little higher than 851. The Russell doesn't move much in the Globex session due to the light volume, but we still like to use the high and lows as we would in the S&Ps or the Dow. So this morning's trade, it's a typical gap fade trade, where they're kind of getting you bearish into the morning time, into the open, the market's kind of selling off. We like to fade that gap. Now, when we do the fade gap, we don't hold the trade. I want you to know this is a laser trade, if you will, or it's a fast trade. Okay, so if you guys aren't comfortable out there, don't one of these things. Don't try this at home if you're not comfortable. So I just want to let you know ahead of time that this is you got to have a good trigger finger. You got to be quick. So anyway, we went long on the open. Okay, as you notice, we didn't take out the overnight high. Okay, that's the Globex session high. Ran into resistance all night on that level, so that's where we're kind of looking to peel off our contracts. Again, the trade paid nice. Paid about 2 points. So right off the open, you hit a winner. What we also do is we typically, by time of day, we would reverse that trade anyway. That's just one of the time zones that we have that would be a reversal right around the 940 area. We can go through that in another webinar as far as our time zone trades, but because we do have 9 of them that fire off throughout the day just based on time alone. So anyway, we would reverse that trade down. What we'd be looking for is peel off some contracts around that median area. That would be the center line of the pitchfork. So you'd get short around the upper parallel. Your first target would be the median area. Second target would be the lower level parallel. And as you see it hit, bang, okay? Lower parallel gets hit. Not a problem there. We're going to get out of all the contracts. Trade's done. Bus is taking us where we need to be, that type of thing. So we kind of get out of that trade. That was a good setup where we were able to, do the gap fade, which again, there's some nuances to that, but we can go to that later in further webinars. But as far as this goes now, this trade's done and over with. You'll see how this trade actually played out. What you'd expect to find in this trade, just so you know, is typically these upper parallel, the median, the lower parallel. Okay, they're all trend lines. They're all support and resistance. Okay, so if we're coming down and we hit the lower, okay, where are we going to go? Okay, that's support. Okay, next we're going to go to resistance right there. Okay, back up to that median line. Okay, also you notice at the 848.68 it says, so 848.70 level, we have what we call a volume trend, and that's where the traders are. That's where a majority of the volume is. So that's where the market wants to trade. It's kind of a gravitational number where the market actually wants to trade. It also defines where the winners and losers are in the market, which, if you're trading futures, you got to know it's zero sum. If you don't know where the losers are or the winners are. Unfortunately, you may be one of the losers because you have to define where they are. Markets are zero sum. I've said this 1,000 times if I said it once. It's not. It's not that there's X amount short or X amount long. It's where they're short and where they're long that's going to make you guys, winning traders in the future. You wonder why, sometimes the markets sell off, 5, 6, 7, 8, 9, 10 points and then rally right back. Okay, what happens is everybody gets short, okay, and then they reverse it. Okay, now you guys are in a losing position. Okay, so it's all based on volume and price level. Okay, so it's volume first. Where are you? Where's the volume and where's the price? Okay, if you can define that, you guys, you'll be years ahead of everybody. Okay, and you'll understand how these markets tend to move the way they do. We all know futures markets are the fastest markets in the world. There's a reason for that. Okay, because they execute based on somebody in a losing position. Okay, it's not like stocks, guys. Okay, you got to understand this market moves. It moves fast. It's furious. Okay, and it can be a lot of fun if you're on the right side of it. And that's what Trade Pilot is here to do, is to get you guys on the right side. Here's another setup here that came in. This is on the S&P here. As you know, it fired off. At the lower parallel, came into the median, blew by that, came back down to it, kind of took it out, came right back up to it, hooked on that upper parallel corner. These corners are key, guys. Okay, these corners are where you really need to, to get in there and take that trade, because if it takes out the corner, you just scratch the trade, but you got such a high probability, of a move back down to that median. You break that, and you're going right down to the lower, okay? And that's where it gets sticky. So we like to take some contracts off, book this trade, guarantee ourselves some profit, and let those runners fall, because that's just the way you got to look at things. We knew it was going to get to the median. We just don't know if it's going to get to the lower. There may not be that much selling pressure. It may reverse from there. But that's whatever you guys want to do. I prefer to take some profit. That way, if it goes against me, I'm out of the trade. I'm already profitable, and it's basically my runner that's going to get run over a little bit. Here's another one here. Came in. This is in the Russell again. Morning trade. Basically hit the lower parallel, did exactly the same thing, flies up to the upper parallel, and just kind of skates down that upper parallel line, kind of bounces down to the median, back up to the upper parallel. You know what I'm saying? You're finding trend channels, guys, and if you can define the trend earlier in the day, you will be so far ahead of everybody else who's out there trying to figure out, is it going here? Is it going up? Should I be long? Should I defend this? This and that. No. The point is when this fires off, okay, it's a gift, okay, because it is a pattern and it's a strong pattern. All right. Like I said, your pitchfork will not fire, okay, if the pattern isn't there. Okay, and that's the great thing about this. So this is something that does take. We do have a screen up for this. We do put it on our desktop. We do get an alert when it's fired, okay, so that we're able to see it, and then we start to pay attention to it. If it's not there, we don't have the pattern. We have our secondary indicators. We have so many indicators. We could fill up a library. But the point is, this is one of them that we look for trend, okay, because I know everybody likes to do those trend trades and and get a lot out of the trade and kind of hang in them. So this definitely allows you to do that. Guys, I just want to finish off this by saying that again, if you understand how futures markets trade, basically there's zero sum, meaning that there's always the same amount short as there is long. So when you're talking about short squeezes or long liquidations or anything for that matter, you always have the same amount of contracts out there, whether it be 100,000, 200,000, 300,000. They're always the same. So if you have 500,000 open contracts of open interest, okay, you get 250 short and 250 long. Okay, the market will go completely sideways at that point, but the point is where they're getting short and where they're getting long. Okay, if you can define that, okay, and you look for patterns, and we do have other indicators that give us triggers. which we'll go over in further webinars, you'll understand how this kind of plays out. Markets are very, very complex. Okay, no one indicator is going to be able to decipher what the market's going to do or how far it's going to go. Okay, that's why we use a combination of them. We try not to get too arcane with them. We don't want to confuse you guys out there, but you got to know your pivot levels, and you got to know where these guys are. You got to know where the volume lies, okay? Because where the volume lies is where there's going to be resistance and where there's going to be support, okay, guys? It's all we're trying to do here, trying to find out where the resistance is, where the support is, and in between there is where that move comes, okay? So, we're going to finish up this webinar now because we're limited to time here on YouTube. So I'll be posting many, many more. Hopefully I'll have a dozen or so up with all these indicators, so you guys can go over these, and I hope it helps you guys out. Any questions, you can feel free to email me. I will respond as soon as I can. Again, I do trade all day, so I am busy, but I do answer all my emails. Thanks a lot, guys. Take care.